I mean, that's really an indication of breadth. Breadth and dispersion are two different things. But but those numbers on breadth are, I mean, that's historically been a very good indication. The sentiment trader guys, Jason, like, they have all kinds of great technical data, sentiment data on the stock market. And for the past year and a half, it hasn't been very useful. I mean, they've had a bunch of indicators all the way up, and I think they're kind of frustrated. And they threw this out, and they're like, this always works, but maybe not this time because this is a different market. And one of the things I've said is that the bull market will end when the Fed withdraws liquidity, and they haven't withdrawn liquidity yet. All they've done is talk. Okay, that's all they've done. It's just jawboning, but they haven't tapered asset purchases. They haven't hiked rates. I think when they do start to taper, I think that's when you see some flattening in the yield curve, and that's when the market starts to run into trouble.
Jared, I wanted to circle back to bonds for a bit and the bigger talk about inflation, because you actually had a quite profound newsletter that you put out this morning, really talking about how so much of what we see, even in financial markets, is through a political lens, particularly in the United States. And you said one thing that stood out to me in the newsletter: Twitter liberals out there who are tweeting that interest rates going down must mean that there is no inflation. I wonder if you can just expand on that. We don't want to get into the whole Democrat-Republican thing. There are plenty of cable news outlets where people can have those conversations. But you're really talking about how this affects people's framing of the market. And you put out a chart that I was trying to decipher and make sense of. So talk a little bit about what you said in the newsletter, and maybe we can go over that chart, because I'm rather intrigued.
Yeah, so, people argue about finance all day on Twitter, okay? But at its core, all these financial arguments are political arguments, because conservative people believe all the same things and liberals believe all the same things. And I have the chart up in front of me. So liberals generally buy growth stocks and conservatives buy value stocks. Liberals believe in deflation and conservatives believe in inflation. Liberals think interest rates are going down and conservatives think interest rates are going up. There's this schooling effect where people sort of all believe the same things. So one of the things that I was noticing, I mean, we've had this retracement in rates of about 40 basis points, and people on the left side of the political spectrum, which I don't want to name names and get into trouble or anything, but they don't believe that we are in an inflationary environment, the 5% CPI notwithstanding. And they think that rates backing up 40 basis points is an indication of deflation. I actually don't think so. And naturally, one of the reasons I don't think so is because I'm on the other side of the political spectrum. I think we have inflation. I think it's really more of an indication of flows and positioning, especially out of Asia. This move that we've had in rates, I think that explains most of it. So I don't think that 10's going from 1.8 to 1.4 doesn't mean that this inflationary impulse suddenly goes away.
And why do you think that the liberal mindset or the conservative mindset would respectively go toward deflation or inflation? I hadn't perceived that in the markets at all, that more liberals were seeing deflation and conservatives inflation. So what do you think is that mindset?
I think I'm gonna try to deconstruct this a little bit. I mean, I'll just talk about it from my own standpoint. I'm not gonna explain anybody else's point of view. Mm-hmm. I think that if you have a belief that we're in an inflationary environment, then you believe in the impotence of the central bank to control inflation. Okay, and if you're on the other side, if you believe that the Fed actually has the power to control inflation, and that really has to do with faith in government institutions, and that's really where the political nexus is in this trade. So, I mean, there was a bunch of other stuff in the list. There was, ESG and buybacks and dividends and, fiat currencies versus Bitcoin and gold. But, if you look at the people who argue on Twitter all the time, they're all on either side of the fence on all these issues. So every financial argument is also a political argument. We just don't realize it.
Jared, I want to know, why is active management do you associate with conservatives, whereas indexing and low fee passive investing is something you associate with the
that's a very easy one to explain, because if you're liberal, you tend to believe in efficient market theory. you believe that people can't beat the market, okay? And it comes down to market efficiency. And if you're conservative, you generally don't believe in market efficiency. You believe that the market can be beaten. So we did have a period of about 10 years where, people were piling into index funds. Vanguard got $5.5 trillion in assets. And now in the last 6 to 12 months, we've had this period of time where active management is actually outperforming. More people are beating the index, and people aren't going into index funds anymore. They have Robinhood accounts and they're trading.
I want to talk about something else that could have a political angle, though I would prefer that it didn't, and that's the Delta variant. We talked the past couple of days about the effect it had on the European travel industry. So I'm curious, with something like this, there are a lot of people in the Real Vision audience who see the alarmist headlines in the media. Certainly we know that media does very well. When you're getting people to click, you're getting people to watch, and certainly coronavirus is something that draws them in. But when you actually see governments start to change policies as a result of the Delta variant, the way we've seen in Europe, now some small, I don't want to overspeak what's going on in the US, but you see LA putting in, encouraging people to use masks again. I'm curious, how do you factor that in to your view of the market then, Jared?
Well, I think a good analog here is terrorism back in the 2000s. So, 9/11 had an enormous impact on the market. The stock market was down about 20%. And then there were smaller terrorist attacks in the 2000s after that. There was the one in Spain, there was the one in London. And after each terrorist attack, the market impact got smaller and smaller. And now we don't really think about terrorism today. So, if the Delta variant were to have an impact, it would be smaller than the original impact. And successively over time, this is just going to recede from our consciousness. And I'm not at this point. It's very hard to position for something like this. Like if you thought that the Delta variant was a factor and you wanted to short stocks, I mean, that could be a very painful trade, because this sort of thing doesn't really matter until it matters. Like, everybody knows the Delta variant is out there, but at some point, if it does matter, we'll reach a tipping point and it will be in the public consciousness, and then it will matter to the markets. But until then, nobody cares. And for me, it's not really a factor. You can't really predict these things. You can only react to them.
Yeah, Jared, what you said makes me think about that what it really hinges on is, can fully vaccinated people be affected by this? Not can one or two, but can a substantial percentage of them can? Because the narrative that has been out there is, if you're fully vaccinated, you can do whatever you want. You can go to concerts, you can go to the beach, you can go to indoor events like you and I did when we went to your party last Friday, which was incredible. But your freedom is not restricted at all. This is the first time, at least in the U.S. for a while, that what we've seen in LA was that they said, hey, even if you were fully vaccinated, we still recommend that you wear masks. That is, I guess, a shift that, if not a real physical shift, that is at least a tonal one.
Yeah, I think it comes down to deaths and hospitalizations. I mean, if you get sick with the Delta variant, but it's mild and there really aren't any consequences, then theoretically there wouldn't be any reason to change policy on that. But when you start talking about people being hospitalized or people dying from it while they're vaccinated, then yes, that would have an enormous impact. I haven't studied it a lot, so I can't really speak to that, but that should be the criteria.
Well, I was just mentioning, I'll just say it again, we have the Delta variant spreading where I am, but hospitalizations, death, very, very low. So hopefully those are lagging indicators that stay just the way that they are.
Jared, I want to ask you, let's go back to bonds. Are you viewing bonds as a potential hedge to your value investments, which are very negatively correlated with rates?
I've thought about it. I think it's a little bit too late. That's the problem. And if the back end rallies even more, I don't think it's going to rally more than 10 or 20 basis points. So to initiate a hedge here, to hedge the inflation portfolio with a long bond position, I think it's just too late, and I'll just chop myself to bits. And I think it's a bad idea.
All right, we have a question from Tom. says, Jared, do you see any signs of market exhaustion, and how would you protect yourself in a correction?
I guess the only sign of market exhaustion that I could really verbalize is, I mean, the chart looks tired. When I look at the chart of the S&P 500, it looks very tired. We have very low volatility. We're moving 30 basis points a day. The last 2 days, we've traded in a 10-point range in the S&P. I kind of struggle to come up with a catalyst that would get the S&P another 5 to 10% higher. I'm having a tough time thinking of that. Doesn't mean I'm bearish, but the chart looks tired.
Yeah, just to that point, the NASDAQ, the Q's down 16 basis points today, and the S&P up 13 basis points. So not a whole lot of movement on the surface. Samuel?
Yeah, well, the other topic that I really wanted to get Jared's thoughts on were these new employment numbers that we had out, private sector jobs. Actually beat expectations, 692,000 jobs added with expectations of 600,000, I believe. So we're just getting back into that inflation discussion again. So I'm wondering where you think that fits in when you talk about labor inflation. I think of all the inflation verticals out there, that one seems to be the most potent. So how does that factor into your thinking as you look forward?
Well, just anecdotally, here in Myrtle Beach, South Carolina, this is, it's basically a hospitality industry here. It's hotels and restaurants. And the labor shortages here were very acute, like it was bad. You'd go into a restaurant and they'd have one server and one cook, and they could serve a couple of tables. And it was a bad situation for a while. The labor shortage seems to be have abated. Restaurants are full at this point. The hotels are full. I think people have gone back to work. I think that's reflected in the private payroll numbers. So I do think that I'm not really in the game of predicting economic data. And I think even if you knew the economic data in advance, I don't think you can make money off of it. But I do think we're going to have a pretty strong payroll number on Friday.
Jared, a key input to your thesis about wage inflation was the benefits that unemployed people could get. Does the fact that these benefits are rolling over in many states, and in some states have already rolled over, I'm talking about state unemployment insurance, does that make you less confident in your inflationary call, particularly when it comes to labor inflation?
I don't really understand. Can you explain that?
Oh, sorry. Well, so I'm just seeing that there are early end dates for enhanced jobless benefits, like Alaska, Ohio, Mississippi, Missouri. I believe in South Carolina.
Yeah.
4 days ago, as of 4 days ago, the enhanced job benefits are over. Do you think that will transfer to a new regime where there's less of an incentive for people to stay home?
Yeah, for sure.
Are people going to go back to work?
The states that have done this represent a pretty small percentage of the population, but I think it's kind of a sneak preview of what's going to happen when the benefits ultimately expire. You're going to see the unemployment rate drop pretty dramatically. I mean, we're at 5.8 right now. We could be at 5.5, 5.6 on Friday. But once these benefits expire, you'll see unemployment go back to the 4 handle pretty quickly.
I'm surprised to hear you say that, though, given your views on inflation. And if that happens, then shouldn't that drive keep wages from inflating too much?
No, I don't think it'll put a cap on wages at all. I think that now that wages have risen, they're not going to come back down. Wages are very sticky. So, the wages that have been set during the pandemic are not going down. And they might go down in some places here and there, but by and large, they're not going down.
Jared, I want to ask you about the commodity trade. Commodities have been totally benefited. They've been swept up in this reflationary wave over the past, let's say, 9 months. Lumber, copper, oil, they were all simply exploded higher. But over the past month and a half, lumber has fallen, copper has fallen. You've seen that these commodities have rollen over, and oil is kind of the last man standing, with Brent somewhere, I don't know, $74. Do you think that we could see some weakness to follow, or do you think that oil will continue to be the last man standing?
No, I don't think so. I don't think people should really look at lumber as an indicator. I think it's a very poor indicator. What happened to lumber that last run up was pure speculation. I really, the 40% up, 40% down, I think that's just sort of an anomaly. I think it's speculation. A lot of people are looking at that lumber chart and they're saying, "Oh, we're having deflation." It's just a special case. Like, I don't think you can look at number. When I look at charts of the ags, especially corn, I think they're starting to look pretty good. I think they're starting to turn. Oil, like you said, is a special case, and I think the supply-demand dynamics for oil are going to be good for a really long time. So, ex lumber, I think I'm still bullish on commodities. It hasn't changed my thesis at all.
Yeah, I think I saw corn was up something like 7% today on news from the Department of Agriculture that something about plantings. Sorry, Samuel, you were going to say something?
No, we've got another question coming in. I don't want to divert from this topic and totally go back to Delta variant, but Larry's asking you, Jared, don't you think that the Delta variant is one of many stories we will likely see over the next few years, even if forced into another lockdown in the U.S.? Don't you think fiscal and monetary policy will remain unchanged and therefore continue to boost asset prices?
That's a good question. It's a matter of the path that we take to get there. Because, pardon my language, but I don't think the Fed has the balls to do this. I really don't. If they were at 120
billion, you think they're so afraid if they change course that they'll spook everybody?
In not so many words. We're at 120 billion a month in asset purchases. If they taper it to 90, they taper it to 60, they taper it to 30, then the market gags, right? Then stocks are down 10, 15%. The VIX goes up to 35, and they'll stop. They'll stop because, this Fed, unlike the Volcker Fed or the Greenspan Fed, they're afraid of the market. So, I think we'll head down this path of tightening, but ultimately, I don't think we're going to go all the way.
Jared, I think one aspect of the question was that if the Delta variant is really, really bad and there are variants, will fiscal and monetary policy continue to, be as dominant as they have over the past year? And my answer is perhaps yes. And if so, Jared, my question for you is, what's the playbook? Is it the same thing that you would have done if you could look back in the future? Whereas when we go into lockdown, you buy Zoom, you buy the FANGs, and then once you get out of lockdown, you buy ExxonMobil and you buy the banks. Is that the playbook? How are you thinking about that?
Yeah, I'm not thinking about it. This is it's all hypothetical. It's all hypothetical. Right. Sure. Like if we had a lockdown because of the Delta variant, buy Zoom. Yeah, absolutely. I'm very skeptical.
Yeah, I think we're still a long way away from that. Even in the UK, for instance, we've been talking about they're moving ahead with their July 19th full and final unlocking, even with the spread of the Delta variant. But it's a good question. The other thing that I was thinking about when you were saying that the Fed doesn't have the cojones, as we might say in Spanish, to do that. Do you think the ECB it has more cojones to do that? Because you look there, they've indicated that they're not going to taper, that they don't think we're out of the crisis over here.
Yeah, I saw some comments from Lagarde. It's I don't think they have any intention of tightening monetary policy at all. I was just in Europe. I was just in Greece, and Greece bond yields just went below zero. It's pretty nuts. The amazing thing is that, Europe has become a little bit like Japan. And I think if they did tighten, I actually think it would be beneficial for equity prices, including the banks. And I actually bought the European bank ETF a couple of weeks ago, and I'm immediately regretting it because I saw those comments out of Lagarde, and I just don't know when they're going to get off of zero. So.
Jared, I want to ask you a question, which I saw something in your newsletter, the Daily Dirtnap today, that really piqued my interest. And it sounded you were proposing a trade that you were going to go in on of actually shorting AMC via calls, so selling naked calls on AMC. Obviously, this has been a widowmaker trade, but you think that you can emerge victorious from this trade. Tell us why.
Well, this is what I call a fun trade. Okay, it's not a strategic trade. It doesn't really fit into the portfolio, but I'm looking at AMC options. They're 200 vol. The stock is at $55. You can sell the August calls for like 11 or 12 bucks. I mean, I'm just, I sold a 3 lot. Okay. It's not a consequential trade at all. Having said that, AMC is probably worth 0. And if you look at the fundamentals of the movie business, they're terrible. I mean, I'm talking about ex-pandemic. Okay. Just take the pandemic out. People are staying at home. They're watching streaming. The content that the movie theaters are putting out is terrible. They rely on a couple of big tentpole movies. It's a terrible business, and I actually think 5 or 10 years from now, you'll probably have half as many movie theaters in the U.S. So I don't even think that AMC is going to survive. Now, my trade is very short term. It's a month. It's just a speculative trade, but I'm pretty comfortable with it.
Yeah, it's an interesting trade for sure. And also tell us about you are doubling down on buying puts on MSTR. Of course, that's MicroStrategy, the company that owns a lot of Bitcoin and now is essentially a proxy for Bitcoin. Tell us about that.
Do you really want to know?
Of course, yeah. I don't ask questions when I don't want to know the answer.
So that's also a small trade. That's also a fun trade. I bought some December puts at MicroStrategy. It's December. And, I think Bitcoin's in a bear market. If you look at a chart of Bitcoin, it's perfectly symmetrical. It's the biggest head and shoulders top of all time. After the head and shoulders comes the knees and toes. Okay. So I think, I really do believe that Bitcoin's going to go back down to about 10,000 in the next 6 months. At a minimum, Saylor's average price is 26,000. He's going to be tested. The largest leverage player in any market is always tested. So, I'm looking forward to when that happens. And, there's the stock could get cut in half very, very quickly if that happens.
I'm just curious, what are the fundamentals driving your thinking on Bitcoin then? I get going down to that level.
Well, there are no fundamentals in Bitcoin.
Well, yeah,
no fundamentals down.
Yeah, your fundamental thinking. I mean, what are the factors that are putting it there for you? I mean, is it sentiment? Is it what's pushing you there?
It's really technicals. The chart is broken. It's a bear market. It's down 50%. And actually, if you want to talk about fundamentals, for sure there's going to be a lot of regulation that's coming. And the Bitcoin people are like, bring it on. The regulation is going to be great. It's going to be good for Bitcoin. I don't necessarily think so. I actually saw there was a guy, I guess there's a Bitcoin committee in the Senate or the House. I just kind of breezed by this tweet, so I didn't really see. But he's talking about how there should be an ability to reverse transactions on blockchain. I mean, the people in charge of regulating this are totally incompetent. They're going to screw it up, and it's not going to be good for Bitcoin at all.
It reminds me of when Congress was trying to regulate the social media companies, which they're still trying to do. And a senator actually asked Mark Zuckerberg, "How do you make money?" Missing the whole. Yeah. All the ads on the.
I think Mark Zuckerberg said, "A senator, we sell ads."
Yeah.
Yeah. Well, we're going to have to leave it there. Jared, thank you so much for joining us. Samuel, thank you as well, and thank you to everyone watching. Oh, quickly, Jared. So over the weekend, you DJ'd a very amazing party that's actually very close to the Real Vision office. I understand that you are putting another party on the docket during the fall. Tell us about that.
Yeah, November 12th, Friday, November 12th. It's going to be at the same place. It's a great space, as you know. And I only have good people that I'm friends with. It's lots and lots. There's no butt heads there. It's a bunch of nice people. So yeah, that party was awesome. Hopefully we can share some pics the next time. So
yeah, definitely. Let's do it. By the way, we have a final question, which is from Ash Bennington, but my colleague says not 100% sure that this is Ash, but from someone named Ash Bennington. Jared, why sell calls on AMC but buy puts on MSTR? Can you unpack why you're open to taking unlimited upside losses on one but not the other?
So not to get too technical, the AMC calls are more expensive than the MicroStrategy puts. So you want to sell options that are expensive, and you want to buy options that are cheap. The MicroStrategy puts are not cheap, but in terms of implied volatility, they're cheaper than the AMC calls. So that's kind of the rationale for that. I don't want to be short calls on Bitcoin. Let's put it that way. So
yeah, that's a great way to put it. We do have something. We are going to, on Friday, there is an interview with a credit default swap trader named David Meneret. I did the interview, and I learned a fantastic amount about credit default swaps. Not something you hear about every day. Of course, they were at the epicenter of the 2008 great financial crisis. But David is exploring, what if credit risk is underpriced, and I can get, if the credit default swap market is basically priced as if the VIX were at 5 or 6. So with that, let's take a quick look at the clip that is going to be airing on Friday.
If I look at credit today, I think the markets are not pricing any kind of unknown unknowns. Markets are pricing absolute perfection for investment grade bonds, for high yield bonds, for leverage loans, for CLOs, for the entire ecosystem. And there are many attractive ways to take the other side of that bet, to think that maybe something bad will happen. May not be as bad as COVID, we hope not. But there are many ways to express a view throughout the credit default swap market, which is extremely cheap right now in terms of protection.
That airs on Friday on realvision.com on the Essential tier. Jared, Samuel, thank you so much for joining us, and thank you to everyone at home who is watching.